Hello there, I'm Matthew Palmer. I'm an Executive Director at S&P Global Commodity Insights, and I'm here in New York this week at our New York City market briefing. We're looking at over 20 BCF a day of U.S. Demand growth between now and 2030. That's coming from LNG exports. It's coming from power demand and exports to Mexico. And so there's a real line of sight into a lot of growth. And so a lot of the discussions we're having this week are around how does that growth get supplied? Is the infrastructure going to be there to get it done? And what does that mean for prices ultimately? And I think one of the things we've focused a lot on is just that the market that we're in these days is a bit different than the one when the shale boom really launched kind of 10, 15 years ago. Producers are more capital disciplined. We've seen a lot of coal retire, and that matters because in the gas market, historically, switching between gas and coal in the power sector has provided a lot of flexibility for the market. And so with those coal retirements, we're seeing less flexibility. And when the market gets tight, we see a bit of price volatility. So as we enter this period of lots of growth, I think the question is, what's going to happen with prices? And in our view, prices will have to be a bit higher anyway, because from where you don't get associated gas, you need dry gas. And dry gas from places like the Haynesville, you're going to see natural gas prices kind of north of $4, approaching $5 on a sustained basis to really incentivize the growth we need to kind of accommodate the next wave of LNG. Another key feature of the U.S. market that we're kind of tracking is as U.S. LNG grows, we're getting to a market globally where LNG might be oversupplied as you get towards 29 and 2030 and into the early 2030s. And that dynamic could push LNG back into the U.S. market if global gas prices get too low. And so one of the things we're seeing is a lot of renewed interest in storage development, particularly as prices are more volatile, but also to accommodate sort of the growing market size and what do you do with when you don't need this natural gas, whether it's for power generation or LNG exports. So we're tracking over 400 BCF of new storage development. That won't all get built, but we do see quite a bit of it coming. And so as we look out over the next few years, it's been a really exciting time, a lot of interest in natural gas, and it's been a really great week here in New York.